Underdog, underdog crypto. Look at my bank account. Lift up my bag, I'm a millionaire crypto.
It's your boy Underdog Crypto, aka Jay, here with another cryptocurrency video. And folks, you know who's with me today. We have the Crypto Intelligence Committee. And you know who that consists of, folks. I'm going to let them introduce themselves, but let me give you who you're about to see. You're going to see Crypto Pro, the sniper in technical analysis. You're going to see Blackrue investing. You're going to see Imfan Akpan, the professor. You're going to see the drill instructor of crypto, Red Dad, Blue Dad. And it's, of course, your boy Underdog Crypto. And I'm going to start with Crypto Pro. Crypto Pro, please tell them who you are and a little bit about yourself.
All right. My name, God-given name is Carlton Flowers, and I'm an engineer. I'm an engineering consultant and entrepreneur. I have several different businesses. I got involved in trading stocks in 1999 when the dot-com bubble was about to burst. And then I jumped into crypto in 2017 when I discovered that my technical analysis that I used to use back when I was hot dogging in the stock market worked in cryptocurrency. And so since 2017, I've been involved and excited for where we are early on and having the chance to jump and ride this train as we see all this money flow into the cryptocurrency market.
All right, and another sniper. We got two, folks. We do it too much. Blackrue Investing. Tell them about yourself.
What's up, guys? Ruel Blackrue Investing here. I have a show on Benzinga called The Ruel Report. It's every Monday at 7 p.m. Eastern Standard Time. Check it out. We talk stocks and we talk crypto. I'm a Michigan State grad, Detroit versus everybody. Yeah, that's me. And I'm all about stocks and crypto. Here lately, I've just been more about crypto because the gains are just they're so much bigger in the crypto space. And really, I believe in the next 5 years is going to be the quickest path for anyone to get to financial freedom as far as like passive income and stuff goes. So yeah, check me out on my channel. You just can type in my name on YouTube and go over there and check it out. I actually have a giveaway going on, and it's going to run through like my next Blackrue report. So the giveaway will end on like the 11th. Just check out my latest video and go down to the description. It'll be a giveaway of 10 BUSD. So check that out.
And you got to bring in the educators, folks. I'm going to start with Red Dad, Blue Dad. Educate them, Red Dad, Blue Dad. Tell them who you are.
Who then? Can you hear me? Okay. Yeah, I'm Red Dad, Blue Dad, a.k.a. Financial Freedom Fighter, a.k.a. Time Clock Smash. Now, my school is simple. It's a school of eyes to see and ears to listen. I am a doctorate. And right now, I am a teacher in people who have eyes to see and ears to listen. So that's just me. I'm from the streets, man. I learned everything from the ground up with my eyes and my ears to listen. That's Red Dad, Blue Dad for you.
And that was Red Dad, Blue Dad. He said from the streets, from the ground up. And then we have another educator, and that's Mr. himself, the professor. Introduce yourself, Professor.
Hi, everyone. I'm Imfan Akpan, Assistant Professor of Accounting at Methodist University in Fayetteville, North Carolina. Happy to be here.
And that was Professor, and you know me, I'm your boy, Underdog Crypto, a digital forensic scientist and also cyber investigator. And we are here together to take our perspectives, combine them, and we've been called the Avengers of Crypto. I like that, folks. And we're going to break down the project Akropolis. Now, what we're going to do, folks, we're going to go on some basic questions. As you saw, this was a 5-part series. Why will we take so much time to break down a cryptocurrency project? Well, you had the professor tell you about rebasing. Did you know what rebasing was before he told you about it? I highly doubt you did, but he broke it down to you. Then you had Blackrue in part 2 tell you about nothing else other than elastic tokens. He has a cat there. That's how confident that man has. He has a cat. Then you had your boy, Red Dad, Blue Dad, who wanted you to know the difference between decentralized finance versus centralized finance in part 3. But you wasn't done. We didn't even tell you. Then we got a sniper on it. We got your boy Crypto Pro, who broke down the technical analysis, the entries, the exits, and his perspective of where he thought this project would go from a technical analysis standpoint. And then, of course, I gave you the final piece of it, that part 5, the research review of the overall project Akropolis. But that's what you got from us. We want to educate you. We want to take you from more than just hollering folks. And that's why we're here today. We're going to go into the questions, and then we're going to go to you. And we're going to break out some of the questions that we had about this project or people have brought up. So let's break it down very quickly. Let's start off with this. Gentlemen, I'm going to start in the order from Crypto Pro and moving all the way to the right. Give your brief synopsis overall about your review of Akropolis. What did you think about the project?
Well, I tell you what, I'll be brief because I've learned so much just from the other gentlemen and especially from Underdog. It's great when you find a project that looks fantastic as an investment from a chart standpoint. And one thing that I look for in a chart is, are they accumulating this project or are they getting rid of tokens? And I usually can tell that by looking at the on balance volume indicator. The OBV is one of my favorites that I will check right off the bat just to see, are people getting out of it or are they moving in it? And if they are moving into that project, then you know that something must be going on where you want to dig in deeper and find out what it's all about. When I looked at the chart, it did look like for the past, just this entire year, overall, the on balance volume indicator is moving up, which says that institutional investors are picking up more tokens than what they are selling. So people are starting to pile up because they're anticipating that this is something that they want to hold. Second to that, it's a DeFi project. And that means being involved in decentralized finance, you're going to have a hot market because we know that decentralized finance is the future of finance. We've got billions of dollars locked up in DeFi projects, which means that people will invest their money in and leave it there and provide liquidity so others can come in and out of that project. And so when I see on the on balance volume that overall there's more flowing into that project than coming out, combined with the fact that it's a DeFi project, it tells me that they're probably very liquid. We have the liquidity to be able to provide the different products that the project is advertising itself for. Then I look at where is the positioning of the price. And we look at this project where the chart dates back, I take it back a couple of years, and it's been as low as a fraction of a cent. But then we also know that it had a peak at about 4.5 cents, and then it settled down, and then it peaked again at like 8.6 cents. Now it's laying low on the ground like a dog. That's what I like to say, which means that the party has not started yet. So I am hovering. I've already grabbed a small position in this, and then I'm waiting for the right moment, which I'll keep everybody informed of when I jump in big. And then I will get a bigger bag, stuff my bags with Akropolis, and then try to get involved in all the things that this DeFi project can offer. So that's why I'm super excited from a chart standpoint. And then I'll stop there and let the experts who know about DeFi to take it from here.
Well, I can't let it do it. Blackrue, you can't just let Crypto Pro go it. Blackrue, you are also a technical analysis. I gotta pit these two against each other. Are you telling me you believe the same thing? Give your thoughts on this one too, from a technical standpoint, Blackrue.
Well, what I really like to use is the Wyckoff theory, and on the Wyckoff, it really looks like it's about to burst out. It's really on that uptrend with that Wyckoff, so I like that. And when I first took a look at it, I was not happy. But then you did your update, Underdog. You did your video, which is great, by the way. I really like that they're thinking about moving over to like Polygon, Arbitrum, and Optimism. check out my video on Arbitrum and Optimism. Basically, they're like layer 2 solutions for Ethereum. Everybody knows Polygon, but Polygon is kind of really like a side chain. With Arbitrum and Optimism, you don't have to do anything. All you have to do is kind of just put your stuff over there. So that was really, really, really eye-opening for me. And at this time, like to be able to grab it at 3 cents before it moves over to those seems like a really good idea to me. And the fact that they have like staking at 27%, oh, that seems really, really nice to me. So, and if you guys don't know what staking is, it's basically like dividends on steroids. It pays out every day, and it's a really, really nice form of passive income. And that's what I was telling you guys about earlier with crypto. You can just really load the boat and build a passive income. So yeah, that's what I got.
So you heard it, folks. You heard two different technical analysis, two independents. Both of them have a reputation on the line. Both of them came to a similar conclusion, but I got to bring the education. So I'm going to go ahead and hit the crypto educators here. We got Imfan Akpan, the professor. What was your thoughts about Akropolis from your perspective?
It tied in more to what was said about the liquidity. And really, it from a broad perspective, because I'm accounting background, two things came to mind. We've got what they call an accounting guidance. So there's guidance on how to treat cryptocurrency and digital assets. There's no guidance on NFTs. So in other words, there's no guidance on how to account for NFTs. We're seeing more and more NFT movement, and you're seeing these large, people are paying a lot of money for NFTs. And what came to mind was the DeFi and the liquidity. People will eventually need to have some type of liquidity for these assets as well as their cryptocurrency. So there's a big play in there, particularly in the DeFi space, breaking up that liquidity. And it's wide open right now. So what I mean by that is there's no guidance, meaning in accounting, there's no rules for what an NFT is under what they call GAAP, generally accepted accounting principles. There's no definition. There's no rules. Is it money? Is it an asset? There's no treatment for it. So it's kind of you're in the wild west at this point with that. So that's my 2 cents on it.
Red Dad, Blue Dad. Are you there, Red Dad, Blue Dad?
Yes, sir, I am.
Let me tell you what I did, folks. I pit these guys against each other. You got the professor and Red Dad, Blue Dad. He will attack an institution when he gets a chance to. So I'm bringing him. Red Dad, you hear all these people talking positively? Tell them the truth. Somebody might be lying to him. Tell them what happened with this project.
Well, see, the way I see it, man, I'm going to come to it with eyes and see. And I like to keep it simply stupid. I'm coming from a crypto investor point of view that turned teacher in a somewhat type of way, because people need to know about this. So my overall thoughts on the project started with what is the total supply of 4 billion. I thought that was cool coming from the investor point of view. The use case, I thought that was pretty cool with the stable coins and the staking and the investors that's in part of it, like NASDAQ, these centralized people, man, that use derivatives and all this stuff. I thought that was awesome from an investor point of view. If they can invest in it, your boy Red Dad, Blue Dad, and family can invest in it too. And two, the platform want to become fully decentralized, so they must know something. I think that they know that this is a product that your financial advisors is going to use that's going to autonomously get everybody's portfolio and let it work itself. All they just need to do is plug their name and information in. It's going to do the automatic staking with their money. It's going to do the automatic yields and everything else. And it's just going to be a product that the bank's going to use with their financial advisors. And that's my overall view for now of this product, of this project.
So, folks, you just got the tip of the iceberg. Well, we're not done because this is a very complex project. And as you saw, this project wasn't all rosy. It had some things that was wrong that I brought out in that video that we're going to discuss as well. So we're going to see if these content creators.
Underdog, we lost you, babe. We lost you, brother. Still can't hear it. You know what? Last time this happened to me, it was some hardware thing that I pressed on my computer, which was odd because I didn't even know that was a button.
Am I there now, folks?
There you go.
All right, we'll see if it stays with me. All right, so last thing I said is there was some red flags also that came up with this project that we talked about, and I'm going to bring that out. But let's talk about the next question, which is, gentlemen, how do you see this project impact from a hodling strategy standpoint and also a long-term investment? This project was all about the hodl. So if you look at, you can actually invest in liquidity pools. It gave it gave a spectrum of people who invested in liquidity pools for a whole year. It talked about how they did this in a way that made the fees less. Tell me about the hodling aspect. In your opinion, do you think this is a good project from a hodling standpoint, and how would you use it?
Yeah, you mute.
Red Dad, blue dad, and work your way up. Y'all,
Yeah, go red dad, blue dad first.
If I stop talking, I want y'all to keep going with it. Don't wait on Underdog Crypto. Let's keep going, folks.
Well, as a hodl point of view, that's how I started investing again from a crypto investor point of view. Hodl is where I started. So if I would have ran across a project like this, from my knowledge, they was offering 26, over almost 27% staking just for holding it. And so these are things that in the future where we're headed that financial advisors may see when they into this crypto space fully as a product to use to sell to their clients and use it. So as a hodling perspective, I think this project is awesome. And high as 26% staking, that is pretty darn high. Your banks is not doing that. So if you got eyes to see and ears to listen, this is one of the DeFi projects where you want to start at for sure. As a hodler.
All right. What about you, Blackrue?
All right, I'm going to build on what Red Dad Blue Dad said. I was looking at an old white paper, and it started off that Akropolis wanted to be like a retirement type crypto where people could like invest funds like a Vanguard and stuff like that. Like these companies and hedge funds are responsible for retirement packages. So they really want to make it simple so that people can come in with one click of the button, and Underdog showed you that. One click of the button, you can just invest and not worry about it. And the thing with stable coins is they're not going to fluctuate as much as other crypto coins. So in that instance, it would be very, very attractive for a financial advisor to come in and invest with it. Um, one thing that Crypto Pro mentioned was it was as high as 9 cents. So sitting here at 3 cents is almost like you getting a 75% discount right here. And another thing, with it going to Arbitrum and Optimism and Polygon in the future, that's 3 different catalysts that you have coming up in the future that you already know about and you already know is advantageous for them. And they have to do it so that they're not dealing with Ethereum gas fees. So you put all of that into a ball, it's very bullish to me.
All right, Professor, your thoughts?
I think it is good to get in. The risk is, I would say, in the long term would be the potential for any regulation. So the sign is now that there's not going to be any regulation as far as when we look at DeFi and we look at the lending aspect. but that risk is there, particularly from if you look at, so we got the government, you've got traditional banks, like we were talking about Crypto Pro, we discussing traditional banks. Will they clap back? Right? Because this is money, and this is, they make money, fees, revenue that's moving into another space. So there's a lot of variables that need to be considered, but I think overall as a long-term investment, it's good, but also to understand the environment, and there's a lot of uncertainty, which equals risk in the long term that can be there as well.
But surely, Crypto Pro, don't do it, Crypto Pro. We can't have yes people all night. I'm about to hit y'all with a hard red question because I can't have. Go ahead, tell us, Crypto Pro. I can't do
Well, let me tell you how I'm going to play this, okay? Number one, I like to swing trade. Now, HODL to me, which for the people that don't know what that means, HODL came from a mistyped word where someone was saying hold. They were saying, what should we do during this, crash when Bitcoin was crashing? And someone typed hold, but they misspelled it HODL. So that became it's not an acronym, but some people have turned it into an acronym where it means hold on for dear life. But it just means investing and holding. So for me, I like to hold on to projects for months at a time. And for swing traders, that could mean buying and selling within a few days or a few weeks. For me, it's several months. But here's how I do it. I'll buy a certain amount. Like I've already got my first bag, right? And then I'm waiting to increase that on a little dip here. And I better not wait long because it might not dip below 3 cents because the chart, you just never know when something that can pump up. But for a project that you can purchase a bag and sit on it and hold, for regular projects, you're holding for the prospect of selling it later when the price goes up. Just like if you would have bought Bitcoin in 2017 at 6,000 and it's say 40, 50,000 now, you could sell it, cash in the chips and make your profit. But what happens when people jump into a project and don't know the technical analysis where they're buying at a peak instead of buying in the dog days when it's low? They buy up here and they might have to wait a year, 2 years, 3 years for the market to go through a full cycle before it gets back to where they started. Like when the folks who bought at the peak of Bitcoin in 2017 in December, they had to wait for 3 years until we hit 20,000 again just to get out at a break even. So with a project like Akropolis, it's a little bit safer because it offers the rebasing, which I wasn't really that big. The only thing I knew about elastic tokens and rebasing was the stable coins, USDT, USDC. I didn't know about these projects like this one that have rebasing, but they do fluctuate more than just a fraction of a cent around $1. And so like I was telling you before, the price here is just under 3 cents, but we see that it had a peak at 8 cents. Now, for a swing trader like me, I'm going to throw money into this and let it sit. I'm going to hodl. And one of my rewards for hodling is to be paid a yield because I'm providing liquidity for others as they want to come in and out of the project. There's got to be tokens there for them to trade. So when I say I'm going to invest into it, and I'm going to lock that up, I'm going to be given a reward because I'm helping this project provide the ability for others to move in and out. That's the liquidity aspect. So I can hodl and wait for the price to spike up and sell some to make a profit. But while I'm waiting, I'm getting the benefit of the yield. Now, the other advantage here is this is a little bit safer than a normal project because of the elasticity. We know that it will only go so low and it will only go so high. So maybe this one won't be $5 in the future because it's going to be pulled back when the volume comes in, heavy buying pressure, it gets pulled back. When selling pressure is heavy, they stabilize it and pull it up. And so it's a balancing act. So it's a little bit safer for somebody like me that if I want to put a big amount into it, and we heard about how they want to be like an investment package for a retirement, right? I could put a certain amount in there. And even though all of cryptocurrency is risky, and all regular investments are risky. This one pulls a little bit of the risk back because you don't have the same possibility of, say, buying in at that complete high and then it dives down 90% and you're waiting 3 years to get your money back out. So I'm definitely going to sit on a core amount that will give me yield, reward tokens, and then have a larger bag that when this thing peaks at 8 cents again, I'm going to sell that. And when it comes back down in a few months, I put it right back in and I'm going to ride that train again. Because I'm all about increasing the bags, recycle that money, and then end up with a bigger amount so I can have an even higher yield. So to me, it's a great one that is less risky than some of the other projects that don't offer the rebasing. So that's kind of what I'm excited about and how I'm going to play it.
The professor?
Yeah, I like that illustration you gave on the Bitcoin, where if and it for me it ties back into the liquidity and why it's so important, because you got to imagine you buy Bitcoin at 6,000. It's at what, 50, around, let's say around 50,000 now. You need some of that money. You're going to sell it. You've got a capital gain. You borrow against it. There's no tax on that money. So this is why liquidity. So when you hear me saying from that accounting perspective, liquidity is important. And the thesis I have is, as we move forward with more and more of these large, big ticket digital assets. So we talk about cryptocurrency, Bitcoin. Coin is at what, 55,000. Then we're seeing these NFTs that are 100,000, 1 million, 50,000. There's that need for liquidity. And supporting that is going to be more and more important moving forward, in my opinion. That's my thesis on that. So that illustration, I think, was very, very good.
Blackrue.
On the professor's point as well, a little bit off of that. If you're investing in Bitcoin, it's at what, like 45K or whatever, or 55K. It will take it to get to 110K for it to double, right? Here with Akropolis, you got it at 3 cents. And you've already know that it's been as high as 9 cents. So already there, you got to double at 9 cents just for it to get back to where it is. So in my mind, what's the better investment? Akropolis, in my mind.
I didn't want to do it, gentlemen. I'm a country boy. And see, I know something. I know I got a few country boys on this thing. Folks, let me break it down in the country perspective, because we got 5 different points of view. We got the educators. We got computer scientists. Let me get country with you, folks. Hey, your mama's cooking, and she takes it, and this is what rebasing is to me. She takes it, and in the South, we don't measure nothing. We put a little pinch in. We add a little flour. If it looks too thick, then we add a little more milk. That's how we cook in the South. Now, this is what rebasing is doing. This is what they're trying to tell you. This token is saying, hey, what you're used to is a token going up really high and dropping really quickly. Nothing controls it. But what we know in the world, in the United States, the Fed, they can add money to the market. They can take money out of circulation. They control the market based on their input. Now, this project says we're going to use these things called smart contracts. And just like mama, we're not going to let it go up too fast, too quickly, and we're not going to let it drop too fast. We're going to try to manipulate it. We're using smart contracts so you have a more stable position for your investment. Now, what Crypto Pro is saying is that could be to your advantage. Now, don't expect it to go from 3 cents to $1 tomorrow, because there's going to be some smart contracts that are made computerized, right? I use that word, I made it up, computerized, to do that. It's going to control that market up and down. So that's what it's about with rebasing. But I want to talk about this because we didn't create this committee so people can just buy Akropolis token and hold it or swing. We are going deeper than that. Akropolis is offering something to you folks, and it gives you ways you can invest in the project and you can put your money in these liquidity pools. One of them I want to bring up is the Boost Finance. It had a 31% increase. These liquidity pools. Let's talk about that, folks. We're not just talking about buying an Acro for 3 cents. That's one way that we're used to making money. Like Blackrue said, buy it at 3 cents, goes to 6 cents. You just doubled your money. We're all happy for you. Well, we're saying, what about holding the token, staking the token, another revenue, and then saying, here's 7 other products they allow you to pull your money in, which varying percentages, even USDT, making money that way too. So gentlemen, let's talk about it briefly though. Let's talk about the different packages Akropolis is offering people. Talk about that, starting with Blackrue and then working our way back up. And just jump in where you fit in.
Okay, I don't remember the specific packages, but the whole goal of it is to basically have a diverse package, which leaves you less risk adverse to getting a big risk. So if you have your money split 6 different ways and 6 different good things, then it's less of a chance that you're going to lose money. And then when you throw in that rebasing as well, that makes it even less of a chance. And that was all a part of the original point of the project, to be something that where people can invest in retirement. Like a retirement financial advisor can invest in this and then be sure that the money is going to be safe and it's not going to be too risky for someone's portfolio.
Jump in where you fit in, gentlemen. Go ahead and follow Blackrue.
Yeah, it's my short simple. I don't know. I think they offer years ecosystem, yearn ecosystem, and they offer a staking. Those are 2 that caught my attention. If there's any more, forgive me. But naturally staking, you just using your own money. I don't think your money is. I think they got a stable coin, and whatever stable coin is a stable price, and you can't beat that when they're offering I think up to 27%. I thought that was just truly amazing. Just to put in your money there. There's a lot of people, a lot of wealthy people. They got a lot of money. They're not gonna chase these cryptos like some of us. They're not gonna have different cryptos that they got to watch the volatility go up and down. So them, if they got millions of dollars and they just want to hedge against their money, then a project like this it's a no-brainer for them. So that's why it's going to be so much liquidity in it, because people are going to bring a boatload of money and just put it into the stable coins. They're going to get liquidity right there. They don't need that money anytime soon anyway. It's going to sit there for the rest of their life, probably their children's life. So for us, for us, the penny pinch, we can squeeze off the percentage that they earn just from their money being there. So that's why we're going to be able to have that type of potential with this, because big money people is going to put their money and use these stable coins. And that's what it's designed for, I think, in the long run of things.
Watch this, folks. I'm about to start a fight. Tonight, I'm trying to start fights. Check this out, folks. I'm going to target Crypto Pro, the professor, and Blackrue. This is what I'm doing. I'm going to use Blackrue's own videos against him right now. Surprise attack. Surprise attack. Blackrue, on your videos, you talk about a project called Veracity, correct? All right. And he said, yes, his mic's off, but he said correct. All right. And on that one, Veracity had a 25% gains, correct? If you was to do an APY with them for staking, correct?
Yes, somewhere like that. Yep.
I'm about to start a fight. I want y'all to get me, gentlemen. You're telling me that if I had my $100 bill and I staked 1 year in Veracity, and if it continues to go up without going down consistently, you're telling me I get $25 for every 100 if I do Veracity. And you're saying, correct, sir. And you're saying with Akropolis, they're saying if you invested $100 and assuming everything positive goes up in that year, you will get $27 for every 100.
That is correct, sir.
And what I am saying, I can't think of a stock or right now a stock or a bank account that will pay me $27 for every 100, nor will pay me $25 for every 100. You guys are educators, technical analysts. Am I wrong or am I over exaggerating?
You are completely right.
100%
Now I can think of some coins that have a higher percentage for staking, but guess what? They're like $3. You're not going to be able to get as much quantity, and the quantity is what can really, really help you out.
Wait a minute, Blackrue. See, I can't let that go. You're telling me, Blackrue, that you're telling me I can buy this 3-cent token. This is what they're saying. Catch me, guys. I want you to catch me in a lie. Say Underdog's lying. You can buy a 3-cent token and you buy $100 worth of this 3-cent token. And that 25% is still 25%. I got an accounting major. He's watching you with it like a hawk right now. You're trying to tell me that if I buy $100 worth of a 3-cent token, or I buy $100 worth of a $3 token, I'll have more money off the 3-cent token in a year than the $3 token because you're buying more quantity? Is that what I'm hearing from you? Get them, Professor. Don't let them talk to me like that, Professor. Get them.
Well, I think the potential there, the ROI and the potential growth that you have with the 3-cent token is it's way more potential there. It's way more potential for that to double. It's way more potential for that for you to split that in half. Because what I like to tend to do is I like to get out my initial investment. So once I get out my initial investment, I'm essentially doubling my money every time. Now, it's going to be much harder to do that if your asset is $3. It has to move to $6. Whereas if your asset is 3 cents, it only has to move to 6 cents.
Come on, Blackrue. Come on, baby.
Come on now. Wait a minute. Professor, don't let Blackrue talk to me like this. Get him.
So going back to it's good, but the one thing that comes to mind is, RDBD was talking about you've got a financial advisor. I'm hearing retirement. I'm hearing these things. You've got amazing returns. But for me, the first thing that comes to mind is how am I going to get this money out and taxes? So again, you got to think about it. You're getting this 27%. That's amazing. But you got to think about the tax. So then it goes back again to what Crypto Pro, that example with the lending. So when you think of high net worth individuals, you got a portfolio. Let's say you got in this case, let's say stocks. You got $1 million of stock, and you want that money, you got to sell, right? And that's a taxable event. How do you avoid that? You do a portfolio loan. You borrow against your investments to avoid that. That creates that liquidity. So when you hear me talk about that liquidity, I hear the gains, I hear the returns. But if you're thinking long term and you're thinking about retirement money, large sums of money, there's going to be a taxable. You got to get it out. It's great to have that 27%. Return, but how am I going to get it out? And again, not evading taxes, but avoiding taxes as much as possible, because that 27% gain on that investment can be whittled down by taxes depending on your situation. So again, I go back to the liquidity.
I'm glad you brought that up, Professor. That's something you always have to weigh is the tax issues. But at the same time, I feel like you also have to weigh like when do you think that your money is dead money? So if you think that you can get if you think you can double your money in 2 days, sometimes it's better to take it out and double your money in 2 days than to leave it there, not take the unrealized gains, and then end up it goes down and you didn't realize your gain. I just wanted to point that out for people. It's not an issue or anything, but unrealized gains are always unrealized gains until you realize them. So if you got that 100% gain, it's almost always better to just take it, because then now you got that money out and you can do something else with it now. So just know that.
I'm sorry, family. I needed to hear that. Thank you.
Let me say this. No, I can't. No, don't say it. Don't listen to Red Dad Blue Dad. He's trying to set you up, guys. This is Underdog Crypto. We're not financial advisor. Nothing you hear is financial advice. This is surely for your information purposes only. Crypto Pro, go ahead.
Okay, so the first thing that I ask whenever I look at something that can offer yield is, what are the chances of a rug pull? And if you don't know what a rug pull is, then you better not jump headfirst into a yield farming situation or a staking situation. And so when you get a deep dive by this guy over here, wait a minute, there he is right there, and you get all the information and background about a project like Akro, and then we know that we have the safety net of the rebasing, then you can say, all right, well, if I stake my money and tie it up with this project so I can get these fat gains, are they going to run and pull the rug and take out the other half that is we're providing liquidity? And let's say that you have to have an equal balance of the token and Ethereum. And then we put our money in and then they run out with the ETH and leave nothing left to balance it out. That's a rug pull. And you can get left holding the bag where you have 100% of a token that ends up worthless because the price collapses, just like that project that Mark Cuban was involved in that was very dubious of how he got his $1 billion out before everybody else got left holding the big fat eggshell. So when I look at this project, I'm like, all right, well, it looks pretty safe against a rug pull. So I can sit my money into here and get some yield. And then I want yield of a token that is going to be valuable. So if we're at 3 cents right now and I set this money aside and I stake it, I can't sell it and get that gain, because if it flips up to 8 or 9 cents, I'm going to cash out and realize gains. I'm like this guy right here. You don't ever want to sit and pass up realized gains, because you don't gain jack squat until you pull the trigger and you sell it. And as far as the tax man, hey, I'm going to get the gains first and then I'm going to worry about that later, because I know the IRS will come running, but I'll deal with that later. I'd rather have a problem with figuring out how to pay the taxes and I got fat stacks than I'm broke and I waited until the opportunity left because I'm afraid of what they're going to take. Like people who say, I don't want to be rich because I don't want the problem with the taxes. Well, let me get the gains first. Then I'll worry about that.
I got a question. What about all the peoples that took millions and billions out of the crypto market already? What about their taxes? What, I'm just leaving that up in the air right there.
I think it's important. Red Dad, Blue Dad. I think it's important, and we got 18 minutes to go. We're going to get a few more questions, but let's talk about the things that we all said in a nutshell. One, for taxes, here's the thing. For me, and I think for a lot of these gentlemen, the people I'm called to serve, if you don't have $1, I'll much rather you have 20 than not to have $0 at all. We're talking about opportunities. So I want you to understand that I've never had a mentality of worry about the taxes. I'm going to do everything lawfully I need to do, legally that I need to do. And that includes, like the professor said, and Crypto Pro, is making sure that you mitigate your taxes. Come on now. These rich people pay themselves $1. Like, why do you think they pay themselves $1? Because they found the legal loophole to diminish their taxes. Some people open up corporations. Some people do a lot of stuff. This video won't be about all the different ways because there's too many ways. But here's the thing about it, folks. Blackrue said it first, and it's unavoidable. Do you got 3 pennies? That's all I want to know. Because if you got 3 pennies, you can have 1 full token of Akropolis. Now, what we're saying is, if you bought enough of these pennies, you put yourself in a position of opportunity, and 0 opportunity is not where you want to be. I would much rather hold on to something to give me an opportunity of wealth than to sit back and tell me, yeah, I didn't want that anyway. That doesn't make sense to me. We're trying to put you in a position for opportunity. Go ahead, Professor.
No, I wanted to get it. I had to get into this because it's going with RB, RDBD. You were talking about longer term and then shorter term. right? So yeah, you're going to realize gains in the short term. Yeah, it's better to get something than nothing. But if the term was long-term investment, financial advisor, financial planning, taxes, that comes into play, definitely. If you're looking in the long term and you're talking about retirement, yes, definitely, you have to think about that. And you have to think about liquidity. How are you going to get it out? How are you going to get some of this money out? So I think that is important. I'm not saying not to take the gain, but you got to think short-term and long-term strategies and where you fit in.
No, get back in here, Professor. We're fighting some more. Wait a minute. Get back up in the ring. Now here's the thing about it, though. And see, folks, I want you to know this is how we have these discussions. We're talking about Akropolis, but we're going to go where the conversation takes you. But, Professor, I hear you about the long-term investments, and I hear you about the short-term investments. But here's what I don't agree with. There's people who are afraid to invest, period, out of fear, and they're not going to get the opportunities. And too many times people, especially who look like me, are not investing because they either don't know about it or they don't have enough information to invest, or the fear comes in play because they don't know how. So what I'm trying to say, I want people to realize that this is 3 pennies. And in reality is, if they put $100 on this 3 pennies, they have a better opportunity to get $300 in the next 1 or 2 years than for them to not invest, let everyone else take their money, because we have the most amount of money in the United States, but it doesn't stay in our communities.
That's true.
Because someone's always pulling it and no one's telling them. What I'm trying to say is, it's better to put that 3 cents on this token and $100, in my opinion, and have an opportunity, because they're not even getting retirements now. Too many 65-year-olds and older are standing in Walmart at the front with bad knees, arthritis, and they're not doing anything. And we're not taking care of our elderly. So it's not happening anyway. So that's why I'm trying to say, Professor, fight back, Professor, fight back.
Well, I'm not going to fight. I'm not going to fight back. I'm going to add to it. That's a great point. So it's good to take that opportunity and fight the fear. And not only is it a tangible, so this monetary gain, think about the things that you learn by the experience. You know, by getting in the water, you know, you can learn how to swim, right? But if you don't get in the water, you're not going to learn anything. So by even just investing, you're learning something, you're understanding the process, and you're knowing more than you did before. So I think that's a great point. And that learning and that experience can, in many times, be even more valuable than just that investment. You know, so definitely, I agree. I'm not gonna fight you on that one.
Well, I run real fast anyway. If you came for me, I run real fast. But honestly, though, I think this is a good point, because this is what I want. I wanted people to come to this platform and not only hear what Underdog has to say, Crypto Pro, Blackrue, Red Dad, Blue Dad, and Professor. These are intellects. They all have their areas of expertise. We all have our own opinions, and we based off of different logics. And here's the thing about it. When you look at this project and look at what you can do with this project, one thing that's common between all of us, your growth cannot just stay the same. If you're stagnant in your growth and you don't listen, the professor is actually talking about, hey, okay, we got you investing, but now you're an investor. What about 20 years from now? What about 10 years from now? You can't just get into it and just stay stagnant, because that's going to hurt you. That is why it's a continual learning process, and you have to do that. But let me bring this. Oh, go ahead, Crypto Pro.
I was just going to say, 1,000 tokens is $30. I mean, I grabbed 1,000 at 2.7 cents. That's $27. So I'm gonna stack it, flip it, run it back, double it, and then take out the base, and then get serious about it. Just practicing. I'm gonna flip it a few times, and then maybe I'll have to say 10,000 to stick in the staking to see what it does, to see how it performs, and then, like he was saying, how are you gonna get it out? And will there be a value to the token when you take out your yield? So you can try, I'm looking on the site, and I'm still learning about this stuff, but they have the different things that you can jump into. There's different tokens in the vault. And so you see this YV boost, which I'm gonna be learning more from this guy about this one. The APY is 31.31%. So looking at the chart, it's been as high as $4 and something. Right now it's $1 something. There's not a lot of information on it, but if it's liquid and then I get that 31.31% at the end of the year, can I sell that and convert it to USDT and flip that into another crypto project or cash it out and spend the money? So this is, to me, a good practice because I had a yield farming experience that went bad because I was involved in a rug pull and I lost like several $100 in a rug pull once, but this looks safer. So I'm about to flip it, stack it. I'm doing this thing and see what I can get because I'm trying to get this money, yo.
Look, I gotta bring it up. We got 10 minutes left, but y'all see that scary guy down there, RDBD. He's been quiet, folks. When Red Dad, Blue Dad is quiet, he's sitting back in the cut and he's observing. Don't get it twisted. I have my eyes on him. This is what I do. I'll be watching Red Dad, Blue Dad, and we brought up rug pulls tonight. We didn't brought up that, and no one's going to talk about this hack. Oh, you know that's the next question, folks. This project was hacked. Yes, I said it. I told you Akropolis was hacked. So when anybody watches and I get those feedback, Underdog Crypto didn't tell me it was hacked, I'm going to call you that name. I shouldn't call you publicly. I said it was hacked, folks, and you didn't even know about it, people. So I told you it was hacked in 2020 November. It was checked 2 times, 2 audits, Surtech. Everyone loves Surtech. And I think it was called Tech. Another one's Tech something, Tech Rate. 2 different audits completed, but the cyber criminals utilized a method that was not accounted for on the audit. Now, let's talk about this hack. We got 9 minutes, gentlemen. Akropolis was hacked. They took $2 million. Crypto Pro said he has actually been involved in one. Now, when he says involved, let's be clear, because somebody going to edit it, Crypto Pro, and say that you was a part of it. He was a victim of one. So that means he has a lot of technical analysis. It can happen to anyone, anytime. So, Crypto Pro, you have experience. Let's talk about this hack. What do you think about Akropolis being hacked? Does that change your mind? And tell me what you think about that.
Well, it made me think, but then after hearing the background of how they reacted to the hack, that's what said it all and made the big difference for me. When I was involved in this one project, it was called Katana, and that was the first yield farm experiment. And I got a PhD in yield farming. I understand how it works from that, even though I lost all my money, but it was a good education. So they were offering APYs at like 20,000%. And so I was stacking up these tokens, but then when I got involved, I noticed I wasn't getting the yield that was advertised. And then a month and a half later, the rug pull happened. And so then the token that I was being given as a reward ended up worth like 0.0001. It was useless, and I still have those useless tokens. Now, there was another hack that happened just recently. It was the Blackrue exchange. They got hacked for something around 20 million, or I can't remember the amount, but it was significant. Blackrue took a month to get everything back together, investigating who stole the money. And they said, give us a while. We have to rebuild the site, restructure everything, and then we'll let you know when you can get your tokens out. I had $2,300 of USDT from swing trading the self-key project, KEY. I had invested $220 and I swing traded it 3 times and grew that to $2,300 in a year. And then all of a sudden they got hacked. I was like, oh, dear God. Well, don't you know, they fixed it and I got my money out. Now, when I heard that Akropolis, their reaction is what told me that they probably have the same integrity of the Blackrue exchange. And when you hear on the full deep dive report that this guy did over here, that lets me know that, all right, these people have integrity because they came back after that hack. And this is the Wild Wild West. How many people come back and say, we're going to make this up to the investors and not just roll right on and say, so sad, too bad. So I was impressed with the way they responded.
Let me say this real quick. And I'm going to jump on you, Red Dad, Blue Dad. I need to say this to make it clear because I don't want to confuse any of the viewers. Rug pull versus hacker are 2 different things. There could be a rug pull hack where you drain something, but a rug pull is more of a fraud. Fraud meaning that the project itself, the project had something unscrupulous happen. and they drain their investors' money. In stock, they often call it embezzlement or something like that. So a fraud. A hack is a cyber criminal finding an exploit, in our terms, or a way through the technical aspects to obtain an asset. That is a hack. So I want to make sure we make that clear. Go ahead, read that, Blue Dad.
And peace, yeah, peace to Crypto Pro for that. And I also want to piggyback off what you just said. That's the difference between would you say hack and fraud. And I want to let everybody know that there's a difference between a scam and a hack. Now, people among the community that's personally around me has been involved into a scam. Now that's different than a hack. See, somebody of underdog magnitude may be able to find a criminal that does a hack, not a scam. That can be anybody in your neighborhood, in your house, that can put it's called phishing or email. Most of it come from phishing or email with numbers that you call and you give away your personal information. Something should raise a red flag somewhere. So that's even harder to find than a person who actually did a hack. Now, the great thing about it is the platform got hacked. So that involves everybody that's in it. So now that can hold the platform accountable, right? Now, if I get caught up in a scam, that's me. That's my personal. There's no one else to get. That's just me. Nobody else is involved. So that's hard to prove, right? When it comes to a police standpoint, right? Now, when you got everybody on the platform got part of a hack, now that platform can be held accountable, right? So that's why I respect the Akropolis of the $2 million. They was real. They went back. They thought about it. They said, okay, we're gonna make sure everybody get their money back. And that was pretty cool. Sent them gift baskets, sent them invitations to the new meetings. So I felt very comfortable with that. So I was cool with it. I just want to make sure everybody know there's a difference between being scammed or fraud, being scammed, and a hack. That's two different things.
And gentlemen, now we have about 4 minutes, and I'm gonna try to get it through. Just one more piece of clarity, and let's jump through these other questions real quick to the point. There is a misconception of price action means rug pull. Price action means scam. This is at the very least a newbie's mindset. Unfortunately, it's common in the cryptocurrency market, in my personal opinion, for people who don't have a lot of knowledge, that every time they see human actions of price action, they equate that to the utility of a project. I'm trying to say, folks, if you look at a project and it's 3 cents today and Bitcoin drops $30,000 and Bitcoin's dominant, if you haven't got it in your mind yet that more than likely the altcoins will follow, and you quickly say, oh, this is a scam, you don't have a lot of knowledge in the crypto market. It may not be a place that you want to be. You have to equate this with the reality. These gentlemen here understand that. So they, like, for example, Crypto Pro, we had a conversation the other day, and he said, hey, Underdog, I'm looking at this project, but let me first see what Bitcoin's doing. I said to Crypto Pro, Crypto Pro, I only check Bitcoin when I want to know about my entry into a project, because I know that Bitcoin dominates the market. He says, good, I got you. I do this every day. When you got gentlemen like Blackrue, Crypto Pro, Red Dad, Blue Dad, the professor, what they do is they understand the nature of the market we're in. So I just want to make that, because Acro could fall. If Bitcoin drops down to 25K, don't get me, guys, wherever it falls to, because it will fall. And I just picked up Acro, and when it was 0.5%. When Bitcoin crashed in April, I picked up Acro when it was 1 cent. It went underneath the penny mark. I picked up Acro. I knew what the research was going to do. So right there is at 3 cents. How many times have I doubled my money? Went from 0.5% to now. So like Blackrue said, I want you to keep those things different. I just want to take that section to talk about that. Whoever wants to jump in, I didn't see your fingers. Go ahead and jump in.
I'll jump in here. Oh, go ahead.
I just want to say one thing really quick to piggyback on that. And I think that was a good point. We're looking at risks. So in this environment, and really you got to put your toe in the water. You got to really jump in the water. So it goes back to what Underdog was saying. You were talking about the 3 cents, getting in, trying it, buying, purchasing, taking part in it. You learn about it. You start to understand the risks, right? And there's risk with everything. So, and that'll help because you talked about that fear, right? And I think we're mentioning these things. It's not to scare people or to put fear, but it's to educate you and let you know what are some of the risks that are in this environment. And there's risk in everything, right? So whether this is the stock market or in general, you're going to have some type of risk. So I just wanted to point that out.
Blackrue?
Man, you fellas just said so much juicy stuff. I don't got enough time to get to all of it. But okay. All right. So as a software engineer, this is very, very near and dear to my heart, what you guys are talking about. I'm going to make another distinction for us here. There's a difference between a hack and an exploit. And what happened here was an exploit. So Surtech, what they check for is hackable stuff. Like, okay, no one can just come in and just take money. So that's what Surtech does. But with an exploit, it can be anything from anywhere that money kind of transacts from. If they find a hole in a certain system, like, okay, this market maker, their algorithm runs this way. Okay, now I can take advantage of that because of the way that the market maker's algorithm runs. I can do this or that or this or the other thing. So an exploit is extremely hard for anyone to account for because the computer only does what you kind of tell it to. And people, all they do is certain hackers, they work all day to find exploits. Now, an exploit is something different than a hack. And what happened here was an exploit. So they're just way too hard to account for. And what spoke to me is Akropolis's integrity. Even though it was an exploit and they did everything that they needed to do as far as like certifying it, made sure it was audited, they said they were going to take care of their customers. And that makes me as a customer feel really, really comfortable in investing in them. Certain hacks and certain exploits are just going to happen. Like what Crypto Pro mentioned about Mark Cuban and that Iron Bank thing. Even that was an exploit. Someone found out that if they move the money in a certain manner, they can take advantage of the system. So the system itself was great, but they just figured out a way to exploit the system. So I just wanted to make sure you guys understood the distinction there.
All right, we got to finish it off, folks. These gentlemen all have a place to go and things to do. We're over the 1 hour mark, and I want to try to keep it simple. I don't want you to feel left. I hope you know that we kept going where the conversation took us about the Project Akropolis. In summary, I'm going to summarize it for you guys, the roadmap. The roadmap was in depth. One of the things about the hack I want to talk about is in their roadmap, they mapped out how they're going to pay their customers back. And they also stated in their roadmap that they're not going to make a decision that's going to hurt the project while they're paying the customers back, meaning that they're actually taking it seriously. You can't just give back $2 million without a plan. So they're making a plan for paying the customers back. So if you watch this video, I don't want you to stop on hacked. That was in November 2020. This is 2021. And now they have already created a roadmap the way, and it's already out there. So if you've been hacked or a part of the hack, you can access a special site that they made for you, and you're accruing that money back through Akropolis. That was it. Gentlemen, one final note, each of you, take about 1 minute, if that, to talk about any partners that you saw or investors that you liked, starting with Crypto Pro, work your way through it. Any partners or investors that the subscribers should be aware of that you like with Akropolis?
Well, I'm still learning about that, and I'll just end with one other small thing just to piggyback off of what you said about the market movement. And so if BTC has a correction, which I think it will before we move up to the next level, there could be a correction that takes it down to 42,000, 37,000, 31, 27, or even as low as 20. When that happens, of course, all the alts follow and you're going to have a major correction. And so the people who are uneducated will say, oh, this is a scam or this is not a good project. No, that's where the market goes. When those dips happen, that's when I jump in with my second great big bag. I'm going to go in head first if we have that major correction. That's why I'm playing around with it now to get to know it, to practice. And then when opportunity comes, I'm going to strike hard because we already know that the fundamentals are sound. We know how they responded after the exploit. Then, hey, this is about as safe as we can go. So I'm going to jump in head first. So I'll let everybody else answer that question and I'll just end with that.
Professor.
I think I'm going to piggyback on the piggyback and really say that education is the key, getting into the market, not letting fear override you. Again, I want to emphasize a lot of things we were talking about because sometimes people will hear hacking, you hear this, it incites fear. This is just a risk. This is something that you should be aware of. It shouldn't deter you from getting in. And I think it's important, like Crypto Pro is saying, to learn, to understand and learn as much as you can. And this is something that it's not going away. And this is something that is very important. And I like what Underdog Crypto emphasizes, that people that look like us, this is something that we really need to really put both feet down into, and it's an area where we can get in right where it's starting, right? So there's really you could say that close to a level playing field as far as entry point into this, and I think we should take advantage of it. And look at it from a very open mind. So that's my 2 cents.
Red dad, blue dad.
Yeah. Thanks to Crypto Pro and the professor on what they said before me. And again, the price entry point, we invest into something, right? Get chance. If you got eyes to see and ears to listen to, invest into something. A little is 3 cents. Now, you get chance to invest into something, a little is 3 cents. But look at the other investors that you part of, like the Cointelegraph, the NASDAQ, Ledger Prime, CoinList, CNBC. All these people are investors into this project. And you that got eyes to see, and you that got ears to listen can be a part of this too for pennies on the dollar. You get to be investing to the same project, baby. You get a chance. And I'm going to leave it like that. I'm going to leave it simply stupid. There ain't nothing else needs to be said.
Blackrue, bring us home, sir.
2 partners that were intriguing to me were Curve and Hedgic. Curve, the stuff that they're doing with stable coins is pretty interesting to me. It almost seems like they're going to have like a Forex trading type of deal going on with Curve. And Hedgic, they're doing options on crypto coins, which seems very, very intriguing to me as well. A lot of people use options to hedge their bets, hence Hedgic, their name. Those are 2 very intriguing partners that they have to me.
And appreciate it. And finally, folks, I'm going to bring it all together. Akropolis review. I took a look at it. You saw the 5 content creators, including myself, discuss it from different perspectives. If you have not watched already, please go to the link in any of the descriptions of any video I've discussed at Akropolis, and I've linked each of their videos, part 1 through 5, and now this one will be linked as well, so you can get this information. Now, the Akropolis project seemed overall to seem like a sound option to add to your portfolio. It looks like it is a good price currently, and it also like it has a forward trajectory. But when you Google Akropolis or look for it on YouTube, it's not highly sought after because people don't know about it. Don't make the mistake, as many people are finding out lately, as they look at projects that I've already talked about 4 months ago, who have now went up exponentially, and jumping on this project once it takes off. It's happened, you've seen with Veracity, Blackrue tried to tell you. It's happened with VV, Crypto Pro tried to tell you. It's happened with the projects that Red Dad Blue Dad talked about. And even the NFTs market that Mfon Akpon told you about. Look at what's happening in these markets. This is a project that some are going as much as 38 cents to 50 cents as of next year. Now, I don't go with hype, but I believe that this project has a lot of potential, or it might go down. I don't know. All I know is that based on the researchable facts that I can find, the project looks solid. Now, we are not your financial advisors. We are not responsible for your trades. If you watch our videos, we're telling you to do your own research. Add it to it. Do not make this your sole reason for investing into a project. That must be your responsibility. And we take zero responsibility for anyone who has more interest in us taking on that responsibility than themselves. We can't do that for you, and you're not even paying us for it. It's not messed up, folks. So make sure you take responsibility. Folks, before we leave, I want each individual to give their how you can locate you. Crypto Pro, how can people locate you? They want to find you and your channel.
Search for me on YouTube under Crypto Pro. Check me out on Twitter. It's at Carlton F, CARLTONF. And then it's Crypto Pro Carlton on the Telegram channel.
The Professor, how can they find you?
You can find me, Mfon Akpon, on YouTube and on TikTok. Mfon Akpon on TikTok.
Red Dad, Blue Dad, how can they find you, sir?
You can find me on Crypto Red Dad Blue Dad on YouTube. You can find me on Twitter, Red Dad Blue Dad. And also, I got an Instagram that I'm going to be turning up, Red Dad Blue Dad, turning all the way up.
And Blackrue Investing, please tell them how they can find you.
You can go to darkhorsewatcher.com. That's darkhorsewatcher.com. Forwards directly to my YouTube. You can like and subscribe, watch the two latest videos about Alchemy Pay and Veracity, and join the contest. Yep, 10 BUSD giveaway. Somebody got to win it. So
I might try to get that myself. Don't be discriminating against me, brother. And folks, if you're trying to find me, I'm Underdog Crypto. You can find me on all platforms. Simply Google Underdog Crypto, hashtag Underdog Crypto. But my time on YouTube is going to be coming to an end, folks. I told you in the beginning, I won't be staying here too long. So while you can, get this information from me as I give it to you. I want you to build on it, and I want you to be dependent on it. I want you to take these content creators, continue to follow them, and also find me, and we'll do that, continue to move forward. Folks, thank you for joining, and until next time, this has been your boy, Underdog Crypto.